The final two objectives in our course are to improve efficiency and to improve effectiveness. These will be topics more when we do something called operations management in a couple of SACs time. So for now, we don't need to know too much, but for a bit of background, we're going to call them operations objectives, and we're going to say that's to improve efficiency and to improve effectiveness. And operations is related to the way the business produces its goods and services. So, basically, a bit of background before we can talk about them is, and we'll cover this much later in much more detail for the third SAC of the year, but the operation system has three stages or elements. The first one is inputs, and they're the resources used in the operation system to produce the final output, and they're going to include things like raw materials, components, utilities, labor, money, which we call capital, but we also call capital resources, plant, equipment, machinery, IT, entrepreneurial resources, and time. But there's other things as well. But basically, these are the things or the resources that we use to produce our output for the business. The second element is all these inputs go into a kind of a metaphorical sort of factory here, which we call element two, and we call that transformation. And that's the process involved in converting all these inputs into the final output. And what happens here will be different for every business, but I guess we'll kind of see doing words like packing, checking, mixing, sorting, pouring, delivering, etc. But this is where the work actually gets done, of turning these inputs into some sort of final product. And that's the third element. This second element here spits out a final output, which we call the transformed inputs or the final product, and that can either be a good or a service. And depending on what business you're studying, that output can either be for a final consumer. So for example, Coca-Cola produces a good for a final consumer to have, like us. Or it can actually be an output for another business that will turn that into a final product, which is different. So for example, if our business made semiconductors, we'd actually give them to another business, say Tesla, and Tesla would use them to make a car. But it's still an output. What else do we need to know? Well, this is kind of the topic for now. All we need to know is that the operation system can be measured in terms of efficiency and effectiveness. Now, in the real world, we probably call efficiency productivity. And effectiveness, we kind of want to think about that as quality. And what we say is efficiency is the ability of the business to be productive and function in the best possible manner by producing the most possible outputs or using the least possible amount of inputs. So basically, we want to produce as many things as we can in as little time, money, effort, materials. We want to minimize the number of inputs it takes to make our outputs. That would make us very, very efficient. Whereas effectiveness is kind of a little bit different. That's the degree of excellence in the operations and its goods and services, and whether the business is achieving its objectives. So the best way to do sort of learn this for the first time is to go, well, it's kind of all around us, this trade-off between efficiency and effectiveness. So with efficiency, you're probably going to say the most efficient businesses are the ones that make the most, or make the most with the least. They make it the fastest, the cheapest. Whereas the most effective businesses are the ones that make the best product, the most reliable product, the best performing, and the one that customers want the most. Now, some products can sort of do both of these things at the same time, but usually we kind of have a bit of a trade-off. So for example, with cars, very efficient businesses that make a lot of outputs with the least amount of inputs are businesses like Toyota and Nissan. Whereas with effectiveness, you could say Mercedes or Porsche or Lamborghini, Maserati, they're more effective. They don't need to make a lot of it. They just need to make really good, high quality outputs. What about with clothing? Well, we've got the fast fashion retailers like Cotton On and Uniqlo. It's just all about selling really a lot of clothing really cheaply all the time, every day. Versus places like Versace and Emporio where the product costs a lot more and it's not designed to be sold as much because each product can be sold for more because it's better quality. Hotels, you've got budget sort of hotels like the Holiday Inn or Ibis, and whereas effectiveness, a Crown Hotel or a Ritz London, something like that, they're very high quality. And department stores, we'll talk about this a lot when we do Porter later in the year. Kmart and Target, more so in Australia, Kmart. Target's not going very well. But Kmart is a business that sells a lot of stuff very cheaply, very quickly. Versus Myer and David Jones, which are relying on selling fewer products but providing a better quality service and a better quality product. So what makes a business efficient or effective? Well, with our operation system, efficiency, we said who makes the most with the least, the fastest, the cheapest, versus effectiveness. They take this operation system and they're saying who makes the best or the most reliable, the best performing, or the one that customers want. So if we took hamburgers, for example, and I'm making these numbers up, but we could say McDonald's makes hamburgers with an operation system and so does Grilled, but their businesses are very, very different. So if these numbers aren't exact, these are just numbers made up to demonstrate a point. But for example, the average burger to make at McDonald's takes 57 seconds, whereas at Grilled, it might take 482 seconds. In fact, it's probably even longer than that. But they're not trying to compete directly against each other. Grill's making a better hamburger slower, whereas McDonald's is making burgers that aren't as good a quality, it's just making them much faster to sell more of them. And it might cost McDonald's an average of 87 cents to make a burger, whereas Grilled, it might cost them $5. And that's reflected in the different sale prices. The burgers at McDonald's are much, much cheaper than they are at Grilled. Lastly, if you surveyed a bunch of customers, and I'm just making this up, but the average taste of a McDonald's burger might be 4 out of 10. It's never 5, it's never 3, it's always about 4. That's actually kind of good quality in a different way, but it's very reliable because that's all they're trying to do. They're trying to make a cheap product very cheaply and very quickly, whereas that Grilled takes a little bit longer, costs a lot more, but the taste is much better. And that's an example of the trade-off between efficiency and effectiveness. So all we really need to know now is what those two terms mean, and that the business as an objective might want to increase efficiency, or it might want to increase its effectiveness, or it might want to do both at the same time.